Hello, in this video, I would like to talk about income statement basics. So you can see here, I click on income statement tab and I will click on this number right here, revenue number for first data entry, which is 1988. And I would like to click on view, and then here you can see freeze panes, and then click freeze panes. Basically, this will help me to keep the headings so that I can see what's going on. So now what I would like to do is I would like to go to most recent data, which is at the very right. So what I'm gonna do is Control Shift right arrow. So that will bring me up to the 2020 data. You can see the most recent data is from June 27th, quarterly report data, which as you can see, this is based on last 12 months data. So I think one of the most important things here to discuss is revenue item. Basically, this is the amount of sales that the company generated. And if I zoom in, you can see that Apple generated $273.8 billion of revenue last 12 months, which is impressive. And you can see that this revenue fluctuates. But if you look at long term, like for example, when company first started, you can see that it was only generating in 1988 when it was first publicly traded $4 billion, and then it's increase and increase, and you can see very fast. Actually, it had some problems in early 2000. Looks like it was not growing so much, and then starting from 2002, company starts going up and up, and as you see, it's compounding so beautifully. And again, last 12 months, $273 billion. And you can see other revenue here where if company generates revenue from businesses that are not in the main business. So you can see the total of revenue and other revenue together, your total revenue. And what I like to do is I like to calculate change from previous period or in general 1 year. In this case, the last one is not going to be 1 year because last 12 months, and this is ending September 28th. So basically, all the other data is going to be 1 year from 2008 for 18, for example, 2019. The last one is not going to be full year because we haven't reached September 28th yet. So that's why, as of now, I can only see basically nine months of data. So what I'm going to do is current month divide by previous month -1 will give me the rate of growth or decline. So you can see that if I click on this under Home tab, if I click on percentage, you can see that the revenue in last 9 months increased by 5%. Okay, so if I just drag this one to the left, now you can see, obviously we cannot calculate for this one because we don't have previous data. You can see that the growth was 30%, 5%, 14%, 12, 13, 15, 20. Looks like in 1996, -11, -28 in 1997, -16. So it looks like those years were pretty tough. And then Apple started growing again. Again, there was a really bad year in 2001 dot-com bubble. Then you can see company was doing fantastic for a long period of time. And you can see that except 2016, -8%, company was going pretty good. Looks like 2019, -2%, and again, company growing. So this is the revenue, how the revenue changed. Another item in income statement, what I would like to talk about is cost of goods sold. These are direct costs associated with creating the goods and services for Apple, like iPads, iPhones, laptops, and apps that they have. And you can see that these are the cost items, that the direct costs associated with the company's production. And when we subtract gross cost of goods sold from revenue, then we will get gross profit. So gross profit is a good measure where we can see that how good the company is doing. So what I can calculate is here that I can calculate gross profit margin, which these numbers were not there. I can show you how to calculate it. I just create a new item here. I called it gross profit margin. And basically, if you want to calculate this, what you do is you divide your gross profit by your total revenue. So let's do that for 1988. Gross profit divided by total revenue. So at the beginning, this company was doing 51% gross profit. And if I just drag this one to the right, you can see that these ratios decrease to 38%, which is still not too bad. That means that every $100 of revenue generated, company keeps $38 after direct expenses. And this number was slightly higher in the past, but then if you go quite a bit of past, like 2003, was lower. So it uh, looks like this value change based on the competition in the market and efficiencies and so on. And currently, most recent data tells us that this is around 38%. Okay, now I would like to look at other expenditures, which are called indirect expenditures, including selling and general administrative expenses, as well as research and development expenses, and depreciation amortization expense, which these are not real expenses in terms of cash flow, but basically it's wear and tear that we consider in accounting. And you can see other operating expenditures. And if you add them all up, you can see other operating expenditures right here. So let me just use a reddish color to illustrate expenditures. Then this is a very important measure, which is called EBIT, earning before interest and taxes. I really like this measure. And to calculate the profitability, I create here EBIT divided by revenue. Let me show you how I calculated this EBIT divided by revenue. You just choose some kind of a grayish color to represent that this is my calculation that was not given in the income statement. So basically, I calculate EBIT for Apple and divide it by the revenue. Okay, so now you can see that it was 15% in 1988, and currently, in most recent years, this number was around 25%, 27% range. So the difference between 38%, which is gross profit margin, I subtract indirect expenditures to calculate my EBIT, and the EBIT is 25% of the revenue. What does it mean? Again, if Apple sells a product for $100, Apple spends $75 right off the bat for direct expenditures like labor, material, some part of overhead, and indirect expenditures like R&D, depreciation, other operating expenditures, and selling and marketing expenditures. And the leftover money from that $100 of sales is only $25. Then next thing I would like to really talk about is another expenditure that we need to consider, which is interest expenditure. And in this case, most recent 12 months, Apple paid over $3 billion interest. However, generated $4.1 billion interest income. So although this is an expenditure, this is, as you see, positive number, meaning that actually this is a really income. So there's more income than expenditures here. So that's why it's more like positive for Apple right now, net interest expenditure. So there's extra money that company generated by lending money out. Now you can see some EBT excluding unusual items like currency gains or losses. Looks like company lost $121 million. And then other non-operating expenditures and income, looks like company generated income from this. So again, it's a positive together. And you can see that the company overall EBT, excluding unusual items, is right here, $68.3 billion. So this is another interesting figure to consider. And if you think about some other unusual expenditures, in this case, company had gain of $14 million on sale of investment. So you can see the EBT including unusual items, which I think I really like this. I want to see unusual or usual items together, $68.3 billion. So now, when we make this much money, government will say, hey, wait a second, you got to pay income tax on your money that you generated. So it looks like most recent years, uh, the company Apple spent 13, 10, 9 billion dollars every year. So when we subtract these tax expenditures from our EBIT to include unusual expenditures, this is what we got earnings from continuing operations of $58.4 billion. Okay, so now we can calculate the net income to the company, which is 58.4 billion, and there is no minority interest given here. So net income, which is a very important number, is here for $58.4 billion. Again, if you want to see more information, per share items are here, diluted items. When we have stock compensations, basically we lose money. You can see company generate earnings, profit, $13.29 per share. However, when we dilute it, it's 10 cents less, $13.19, which I care about this number more because diluting the shares earnings is basically money getting out of the investor's pocket. So long story short, you can see some other measures here too, but I would like to recap here. What I care about is revenue. It's very important, and revenue growth is very, very important formula. You just label it here, revenue growth rate. This is very important for me as an investor. Growth rate. I like to understand the direct expenditures and indirect expenditures. And then based on direct and indirect expenditures, I really like to know what's going on with EBIT of the business. And then I like to understand interest expenditures, and I like to understand the unusual items here. And I like to consider the income tax paid and earnings from continuing operations and net income. So this is the bottom line for a company, right? But as an investor, net income is less meaningful than cash flow. So that's why I will talk about that in the next videos. That's it for this video. Until next video, enjoy valuations.